Welcome to another edition of Strategic Moves with Lou. I'm Mike Hendren, a licensed real estate agent here in Wichita Falls, Texas with Strategic Realty. And seated down the way there from me is Lou Italis, the owner-broker of Strategic Realty. And we have a special guest today.
We do. This is Cindy, and she's with, I don't remember.
Caliber Home Loans.
Caliber
There we go.
Yes, Caliber
Yeah.
Home Loans.
Yeah,
Happy
Cindy
to be
David.
here
How
on-
are you?
I'm good.
Good to have you.
It's Cinco de Mayo Day.
The day that we're recording this, yeah. So it's been a while since you've been with us.
It has.
And,
it's been a few months.
Whew,
What's happened?
much has happened in the last several months.
Lots
on-
of changes to the
Yes.
market.
Absolutely.
Has been. I feel like things have kind of slowed down a little bit in terms of price. I don't feel like things are getting bid up as quickly as they were maybe a year
That's
ago.
a good thing.
But
Maybe.
but people are still looking, and we're still. I mean, I'm still running into this. Clients getting frustrated with, they find a house
Available.
and there's already a contract on it by the time we make,
Yeah.
and the inventory is still very low for the market. I mean, we were somewhere in the 132, 133, 134 mark a couple of days ago. I haven't looked at the numbers since then, but
I think it's going to be about the same.
yeah,
It kind of stays steady.
we've
when
been
it's
hovering
low.
about that number for a while.
Yep.
And now I know we've been as low. We were in the 90s for a little while.
Yeah. Under 100, for sure.
And then we stayed between 120, 130, 140, which is okay. But ideally, we would need 500 or 600 properties on the market, or we should have.
I would say at the very least about 300, 300 to
Yeah.
400.
Is that just for Wichita Falls, or are you talking the
Like
surrounding areas?
Clay,
also?
Archer,
Okay.
yeah.
So that's all this area.
Yeah.
Yeah, that's not a lot.
In our MLS system,
Yeah.
we only have 132 listings in our
Wow.
MLS system, active.
And that's 5 counties.
And
Right.
roughly.
Wow. That's amazing.
So it's not a
I know.
lot.
It's crazy.
Well, Cindy, for your part, the financing side of things.
Yeah, tell us what's changed or what we can see going forward, because
Yeah.
I'm hearing some crazy stuff.
Yeah, we know what we hear. We know what we hear in the news, but what's really going on your side of things?
Well, we're coming up with all kinds of new products. I just went through and got certified on one of our products that I think is going to be an amazing product that's going to help people, because sometimes you may have houses that need to be, upgraded a little, carpet, paint, maybe not a total rebuild or
Total
model,
rehab.
but, 25,000, 30,000. But the people are like, well, I can't buy it and then have to do all of that too.
Right.
Well, we have what's called a renovation loan now.
Oh,
And so they can do the renovation at the same time they purchase.
wow. Okay.
And,
Okay.
they have to have a contractor that would be approved unless they go through one of the products that's called a big box product, where they go to Lowe's, Home Depot, or somewhere.
Okay.
And our
Materials.
they don't do it. Home Depot does the work for them.
Oh, okay.
And
then.
our
Okay.
renovation department works with Home Depot, Lowe's, or whoever they're using.
Okay.
And they can do that and not have to go get a contractor.
Okay.
Okay.
And then not have to get an approved contractor and going through that whole process,
Okay.
especially if you're just talking, flooring and some
Right,
cabinets
right.
or whatever.
Yeah.
But anyway, I think that is going to be a huge product.
I think so too, especially since people are running out of rehabbed homes. I mean, this generation seems to really like the, updated homes.
Mm-hmm.
Yeah, absolutely.
Yeah, it's all about the granite countertops and the,
Yeah. Definitely.
newer kitchens.
Right.
And,
Yeah.
they don't want to see the
Yeah, they
don't
want
wanna see
everything,
the
the
old
colors.
bathrooms.
Yeah.
Yeah. You run into a lot of
want
these
the fancy tile.
these homes that were built in the 30s, 40s, 50s, and they've got the same cabinets they had when they were first built. And I showed one yesterday that this carpet was almost certainly installed when Reagan was in the White House. It's that I had an aunt and uncle that had this exact carpet in their home. It's a kind of a goldish brown color. And it was in remarkably good shape, but I can tell by looking at it, this is at least 40 years old. I mean, it's got to be 40-year-old carpet. And it's one of those houses that, the folks that lived there were older, they passed away or had to go to a retirement community or whatever, and they never did anything to the house.
Yeah.
I mean, they never did anything to. I mean, it's probably got the same paint on the walls it had 40 years ago.
Well, I mean, even the newer, the fancier homes, like the $600,000 homes. I closed on one that still had gold everywhere. It's just
wow.
Well, and I think a lot of times
everywhere. Even the little
appliances were gold.
The appliances had little gold knobs and stuff like that on it. But no, I'm talking about like the cabinet door, the hardware.
What was this, Liberace's vacation house or what?
No, well, it was one of the ones that was built in the early 2000s.
Oh,
over there in Canyon View, Trail.
Canyon Trails. Oh, yeah. Okay, yeah, one of the first homes over there.
Probably.
Yeah, that would have been about the time they were starting that.
Well,
mid-90s, and then
I'm pretty sure this one was built in like 2006.
Oh, okay. Well, that's one of the later ones then.
Mm-hmm. Yeah. Wow. But it was gold everywhere, and I'm like, oh gosh, that would be the first thing. Even the sink in the bar. The sink itself, not just the fixture, the sink itself was made out. It was gold.
Oh, wow.
Or bronzed or whatever you want to call it. I was like, wow. Yeah, that's got to go.
Yeah.
There's a little opulence going on there. Well, so the thing that's on everybody's mind is interest rates. You know, people were scoring 2.65, 2.95.
It was basically like a free for all for lenders
or
for buyers.
Oh, it's like you're robbing the bank, you know.
Yeah.
That's not happening now.
No, we're looking at 5, and sometimes a little over, depending on credit scores and that kind of thing. So it's definitely changing.
I've seen some as high as 8.
Really?
Yeah.
Well, and you will get that for different credit scores and different situations, and what they're doing. So there are some higher ones. I mean, I'm working with the military person, and they're trying to get the very low. And he's like, well, my friend in December got like 2.75.
Oh, that was December.
I was like, well, we've come a long way in a short period of time.
A lot can happen in 5 months.
Yes.
December is gone.
I'm hoping it levels out and stabilizes anyway and doesn't keep going up, but Fed rates yesterday. So
well, but I have a theory on that, and you tell me if you think I'm right or wrong or semi on target or whatever. But these people with the Fed, which there's so much I could say about them. They're not stupid. They've got to know that there's a line they can go up to. Mm-hmm. They can step on it, but they better not cross it. If you push this thing too far, you run the risk of really train wrecking stuff, of shutting things down, because it's not just real estate, it's all sorts of borrowing that is affected by the Fed's decision. And I know they're talking about 6 or 7 rate increases this year or something like that, but do they really go that far, you think? Because I just don't see it.
I think they're going to stop. I think they're not going to push it where it shuts down the economy, is what I think. But I may be wrong. Who knows?
But where is that line?
But how does that benefit anybody if they did that? Yeah. It benefits nobody. It doesn't benefit the Fed. It doesn't benefit industry. It doesn't benefit the housing industry, the construction industry, anything. I mean, just name any industry. It has a positive effect on no one. Mm-hmm. It's all negative. Right. So, but from your standpoint, I mean, you said 5%, 6%, 7%. I mean, do you really think it could go north of that?
Well, it could. I mean, I've seen.
For the average borrower, I'm not talking about somebody like with bad credit or
bad credit. Yeah. But I mean, I'm hoping it doesn't, but it could. Yeah. I mean, I don't have a crystal ball, so I don't know what they're going to do, but it could. In which I do down payment assistance also through the state.
Sure.
And they have backed off some because of the rates. They're not offering like a 5% assistance now. And yesterday they weren't offering a 4%. They were offering 2% or 3%. And the 3% assistance was 6.5% yesterday.
6.5% interest.
Yes, which to me that's not that bad when you're still getting the assistance because it's not that much over the normal rate. That was for FHA, for a 3%, and so some people still need that. And I don't think it's. At least I'm glad they're offering it because for a hot minute there they weren't offering anything. They quit. They said, "But we're going to wait and see what this market does." They kind of backed down and said because it was changing so rapidly.
Right.
But they've come back, and then also I have USDA, which we've got so much outlying area here with Iowa Park and Henrietta and Burke and Archer and Windthorst.
You might need to get a little closer.
Oh, sorry. That people could use the USDA, which is zero down.
So
that's a good option for people.
And that's a good topic to get into here. USDA, what qualifies a home for USDA financing? What are some of the qualifications it has to meet?
Well, it's going to be pretty much like FHA as far as the home itself, like the peeling paint and
the location is the primary.
And the location, will determine whether they can even go USDA. And then it comes down to the condition of the home.
Right.
But, we have a deal where we run the address through it and see if it's eligible for USDA.
It just has to be outside of the city limits of Wichita Falls.
Yeah.
Can it be in Burke? No, right?
Yeah, there's some
it can be
areas
in
in
Burke.
Burke.
Okay.
In Iowa Park and
I sold one in Iowa Park recently that was in the city limits. Now, I don't know if it was in the city limits when it was built, but it's in the city limits now. And I was told the last time it sold, it went USDA.
Well, it can't be in the city limits of Wichita Falls.
Yeah.
If it's in the surrounding areas like Iowa Park.
Yeah, because they're still considered a rural community.
Yeah.
Yes,
Yeah.
absolutely.
Yeah.
So it just can't be in the city limits of Wichita Falls.
Yeah.
So
But it can
that's
be
a good
anywhere
option.
around it.
Because that's not even a second lien. I mean, that's just down payment.
Right.
So.
Right.
Yeah, that's
So-
zero down. So it's just zero down payment, basically what it is.
Yeah.
And I think the qualifications are going to still be very similar to FHA.
Mm-hmm.
Yeah.
So you'll have to have that same credit score.
Pretty much the
threshold
same.
Yeah, and I did one
ratio.
last year that was a USDA loan and that kind of thing, and went very smoothly. I mean, there were no big hiccups or anything with it.
Yeah, I think a lot of people think, it's just too much work or trouble, but it's really not. I mean, it's not that bad to do. Not any different, more or less, than FHA.
It just can't have
VA.
peeling paint and wood rot. So the home still has to qualify for an FHA loan.
Well, from my side of it as the buyer's agent, I didn't notice any difference between the way that process went in terms of how smooth it was or the speed of it than a conventional loan. I didn't notice any difference at all.
Yeah, pretty much you won't.
Yeah.
And if there is any difference, it might not be that product. It just might be the situation with the buyers or something that takes a little longer, but it might not be the actual product itself.
Yeah. So what all products do you guys offer then total? And in total, what can you offer somebody?
There's pretty much, we have such a wide array. Like I said, we've got USDA, I've got T-Shack, I've got, of course, the normal VA, FHA, conventional, and then the renovation thing. They can do a VA loan and get renovation money. They could do conventional and get renovation money. They could do FHA.
Is that considered like a separate lien for the renovation?
No.
They
It's
do it
all in one deal. They close at the same time. They do the purchase.
Because FHA, they've had a renovation loan program. FHA has it. It's like a 203B is like a regular 203K.
203K. We have like a 203K limited, and then we have an unlimited where there's not a limit on the amount of the work that they could do, and then there is a limited one. So anyway, there's two of those. We have also, which is good for people building a home. I'm not doing the construction financing for them right now, the interim, but I can do the permanent, and we can lock them up to a year. The rate's going to be a little higher, but, I priced one the other day, and I think it was 0.5% more than what the rate was now, so that's really not. And you don't run the risk because people don't know what it's going to do right now.
No.
So it gives you a way to lock in.
Lock in a rate, because in a year, the interest rate could be 12%.
Yeah.
Yeah.
And you do have to pay some money up front for that, but that is not just going away. That will be credited towards your closing cost.
Right.
It just commits to us that you're not going to walk away from this if we lock you in for that, pretty much.
Is there any out on that one though? Or is it like, so for instance, if their life changes?
Yeah, I mean, they will look at that also, and then there's also a float down option. Say the rates start going, I think there's a one-time float down that they let you do on that.
Explain to people what that term means.
Well, it would be like the rates changed a whole bunch and they went down.
They went
and then they could go down on their rate, but only one time. So if they do it and then they go down later, then They can't
Yeah.
keep going down.
Yeah.
So.
Yeah, you get into a market situation where it's a little bit of a gamble with that stuff because,
it is.
you know, okay, today it's say
Play in
it's
the market.
5, and next month it drops to 4, and you take that, and then a year later it's 3 again. You just don't know, or it could be 7 again. We don't know.
Yep.
We don't know.
Crazy. But we have also the Smart Series loans, which is we can use bank statements for the self-employed to qualify them with their bank statements versus tax returns.
Those are a new product that we haven't really talked about much on this one.
Well, let's talk about those because this brings up an interesting segue here. So one of the things that we saw come out of the pandemic was a sharp increase in new entrepreneurs. You had a lot of people that probably got laid off from their job, at least temporarily, because of this. And
had to get creative.
And they got creative and they started their own business. And so now they're self-employed. Now, I want to say the number was 800,000 new entrepreneurs created in 2020. Well, if even 50% of those remain in business in 5 years, that's a lot of people.
Yeah.
So it sounds like banks and lenders like yourself are probably going to see an increase in people showing up that go, hey, I'm self-employed.
Yes, absolutely.
Don't have a W-2, but here's my stuff.
Right.
How's that going to? How are they going to be impacted by this? Is this going to be a good thing for them?
Oh, absolutely. I mean, they're still going to have to be in business 2 years, self-employed for 2 years. But say the bank statement loans, we have a 12-month or a 24-month.
Mm-hmm.
So say they had their first year, they're getting started. So their income wasn't quite what it was the second year. They're really blowing and going and everything's great on the second year.
Sure.
So if they want to just qualify on 1 year's, we can do that most recent year versus 2 years average to get them, more income.
And it goes based off of the deposits more or less than anything.
In there, yes, and versus expenses. I mean, there's an expense ratio that they look at.
Sure.
But yeah, it's a great product. We also have a product for investors, and it's more for the experienced investors that are buying investment property, rental property, or whatever. But we don't even look at their income on that. I mean, of course, you're going to look at their credit score and all that.
Sure.
But it's based on the lease amount versus the payment,
Okay.
And so that's a great option for investors. So we have that. We have an Edge product, which allows people, you still got to have a pretty good credit score on that, but say you came out of bankruptcy 2 years ago, we can look at doing that for them. And a lot of products, you have to be out of bankruptcy longer than that, or a foreclosure or something like that. But we can look at that after 2 years, depending on their other situations. So we try to cover that. So we're trying to cover all sectors. I mean, whoever would want any product, we should try to help them, if any way possible. I mean, there's sometimes you just can't, but we do try to help them get to where they're going. If they can't right now, we try to help them get there.
Well, just for the average buyer, consumer out here, how low does the credit score got to be before they walk in, you look at their credit and go, nobody can help you? I mean, how bad has it got to be?
Well, used to we could do, say down in the 580s or something like that. Right now,
which is pretty low.
It's pretty low, but right now, pretty much we need at least 620.
Yeah.
Get up there, and even on the down payment assistance, they can go as low as 620. But when you get down to 620, they're going to charge you a half a point origination, even then, on the assistance part. So,
the lower your credit score, the more it costs you.
That's true. That's true. Absolutely. But we try to help them. Where it gets up there, because sometimes if you're at a 580 or something like that, it doesn't take much to get your score up. I mean, I've had people do that, and
I really think what helps our market, I'm not going to try to speak for anybody else in the country, but what helps our market here right now more than anything is just more inventory.
Right.
We're building houses. Can't build them fast enough.
Right.
And
I didn't know you were building.
Yeah, we're building all those ones over off of Northwest.
That's awesome.
And
Meadows.
you can't get them built fast enough, and there's not enough people selling their existing homes, to beef the market up. But
do y'all
I don't
have
know.
some that aren't. Do you do specs or?
We haven't had a chance to do a spec.
Okay.
As soon as we throw something down, it just gets in contract.
Yeah, it gets in contract. So.
Yeah, you know,
you don't have any that aren't in contract then right now. Wow.
I've got one that's going to be built soon, we hope, and
he's got some of the lots that might be built yet,
and two more that yesterday I was on the phone with 5 different people concerning those other 2 lots. And I can't tell you how already in the last week how many people I've met out there to show, okay, this is where you would be right here. This is your spot. And, you know, few people are kind of like on the fence about it. You know, it's like, you better, if you really want this, you better not wait.
Yeah.
This ain't going to be here in 2 weeks. You better, if you want this, you better get it. And it's a situation where if we just had more inventory, I think that more than anything gives our market a big shot in the arm, just having more available inventory, because the buyers are out there.
Yeah,
they're out there. They're still there. And I don't think even at 5 or 6%, I don't think we're going to scare anybody off.
It's not really slowing anybody down.
No, it's not.
I haven't noticed the slowdown on the buyer side.
No.
They're still looking for property.
Well, and maybe sometimes even more if they feel like the rates are going to keep going up. They may feel like, well, we need to buy now.
We got to go now.
Yeah, it's
urgency.
But you got to have something to buy.
Yeah, that's the thing.
That's the conundrum we're in here.
Rental properties. From what I hear, there's not a lot of that either.
No, there's not. The rentals. I mean, that's where some of the clients I've been working with, we've really struggled. It's finding something that they want that fits their needs in a price range that they can afford.
Mm-hmm.
And I seem to have 2 distinct customers here. I got the guy or gal or couple over here that needs rent under $1,000 a month.
Mm-hmm.
Good luck. And then I got the guy, gal, or couple over here that we can do $2,000 a month. We can do $2,200 a month.
There's just nothing in between.
It's not there though. That's the thing is you'll find it and then I don't really want that, or that's not big enough, or it's too big or whatever. But the rental inventory is so low. Mm-hmm. It really is. I don't Lou, has it ever been this bad with rental inventory?
I don't think it's been this bad at all with rental inventory or
just the volume of what we've got available. It's just it's low.
It's getting a lot more. I mean, we listed a mobile home on 6.5 acres, and I've been doing this for a long time. I've maybe sold 3 mobile homes in my whole entire career.
Yeah.
I can do those now too, by the way.
Oh,
really?
Yeah,
and
that's
so a lot
good
of people
to know.
aren't doing those, so I can do them.
Now
haven't done one yet.
That was a really challenging product just a few years ago, wasn't it?
That's what I'm saying is that most of the people don't buy mobile homes, but we listed this. Nina Harrington listed this mobile home for $195,000, 6 acres. It's on 6.5 acres. Right.
So okay, well, really I get that,
acreage. but my client came to me and was like, you know, I don't know if this is. I think I might be overpricing it at $195,000, and I was like, no, just give it a second. You know, let's just do it and see what happens. And sure enough, she listed it, and all weekend she was showing it.
Was it affixed to the property?
Yeah,
because that's one thing. Most of them would, but it has to be affixed.
And she had 5 offers before Monday.
See, and in the city of Wichita Falls
over
now,
asking, like significantly over asking.
Oh wow!
Yeah, and I know.
It's crazy.
And he's just looking at me like, Lou, you didn't say this was gonna happen. I was like, I was waiting for it.
That's why we said be patient.
It was a
be
mobile
patient.
home. Well, it's a double wide. And
manufactured.
Yeah,
well, and granted, the manufactured homes they build today are not like the trailer that Jim Rockford lived in the 1970s on TV. It's not the same thing. It was a nice. Yeah.
It was nicely put together. And it was well maintained and had nice floors and everything. So in that aspect, it's not a shanty.
Right.
Yeah.
But
like the city of Wichita Falls, now if you're going to put one in the city of Wichita Falls, you have to go to zoning and planning. You have to get a variance or whatever from the city. It's got to be at least a double wide. I think you have to brick.
It has to be brand new.
It has to be brand new. You have to brick them, I think, now underneath. You can't just skirt them.
I don't know.
think you have to
it's
brick
not
them.
something that I would even consider doing, so I don't know. But
Well, I mean, the price of those things is shot way up.
It has.
they have,
I mean,
You know.
yeah, just to get a new one or whatever is
Yeah.
150 at the very least.
At least,
Well,
yeah.
and
I mean,
that's
it's
just 'cause
easy
the-
to get to 200,000 on the
Yeah.
nicer ones now.
Mhm.
Easy.
But I'm not kidding you. I've been doing this for 13 years, and I can count on one hand how many manufactured homes I've sold. I had one on Lakeview, I had one in Burke, and this one. Yeah.
And I bet
You know,
that
I've had calls in the past, and not too long ago, wanting to know if I did them, and at the time I didn't, and I was,
Yeah, right.
you know, I couldn't,
Mhm.
and so, but I can do them now, so,
wow.
and happy to do them.
Yeah.
Yeah.
You know, whatever anyone
Yeah.
Good to know.
needs, I'm
That's good to know
happy.
because every once in a while I'll get a buyer
Yeah,
that
you
wants
do get
one.
one, and
Yeah.
You wind up discouraging them because you just don't know who to send them to.
hmm
I remember I used to send them to Prime West, I think.
yeah,
Someone like that. Yeah. Well, I mean, it's great that y'all can do that now.
yeah.
It
It
opens
is.
up a new
So
market
that's
for
another-
you.
That's
And
another market that is, you know, that I'm glad
Yeah.
to have and be able to help people in that.
Is the interest rate different on a mobile home than it would be on a regular single family home?
No, I mean it's going to be
Gonna be
whatever
FHA or
product.
VA?
Yeah, it's
Really?
going to be whatever the product
Will
is.
will VA work for a mobile home?
I don't think VA will. I'll have to check on that.
'cause
I'm
trad-
not
I say
positive.
mobile home. I keep
manufactured home,
home.
yeah.
Yeah, there's a difference.
And they
a mobile
may.
home.
I'll have to
is a-
check. I'll have to check on that. I
Yeah.
haven't had that come up because this just happened. So I don't know.
Okay.
I'll
well,
have to check.
traditionally they didn't hold value like a stick built house
Right.
would. You weren't going to get the same value out of it. You just
No,
couldn't.
they depreciate kind of like a vehicle.
Yeah. Well, but I think they were actually titled like a vehicle.
They have a VIN number. Yeah.
Yeah.
Mhm.
Now, I don't think that's the case. I may be wrong. I don't think they do it that way anymore. I think it's different now.
For a mobile home, yes, they do. They still have the
They
VIN
still
number.
have a VIN number.
Uh-huh.
I
Yeah,
think.
they still have to have a VIN number on them. I'm not sure about the manufactured homes or the modular homes.
But once it's,
Yeah,
I,
don't
I would
either.
think once
Not
it's
positive either.
axles off, anchored to a foundation, permanently installed, I would think at that point then it becomes effectively like any other house in how it's,
not a mobile home.
you know.
It's still got a VIN number.
Yeah.
They still require the.
I know
VIN
at the
number and
manufacturer,
everything.
like a brand new manufactured home.
Oh, yeah.
Yeah.
That's beyond my expertise.
Wow.
If they go FHA, I do know that you have to hire, I don't know, an engineer or someone to go out and do a report on it.
Uh-huh.
Oh,
In
Yeah,
addition to
structural
the
report.
in
Mhm.
addition to the appraisal,
really?
and that can cost anywhere $700 to $1,000.
Yeah.
you know,
And this
in
is on a
addition,
manufactured home or on a mobile home.
either one.
Either one.
Oh, man.
Yeah.
Okay.
Yeah.
Well,
So-
Cindy, it's been great having you here. And we could go another hour
Oh.
with you, I'm sure.
We could talk real estate all
Yeah.
day.
We could talk all day long and twice on Sunday.
That was great being
But
here.
we're going to wrap up here. So, Cindy, how do people get in touch with you if they got questions about financing?
They can call me at 940-781-9396.
Okay.
And I'm also located in Century Plaza. If you know where Regeneration is, there's
Uh-huh.
a courtyard next to it, and then there's the Maplewood on the other side. I'm at the back of that courtyard behind the Maplewood.
And I'll bet you guys have got a website, too, that you can
Oh, I
send
do.
them to.
Yes,
Yeah.
absolutely. So, but call me or look up my name online.
Okay.
Cindy David Home Loans.
Okay,
So-
very good. All right. And, of course, if you need to buy or sell a home, we want you to call us. Hello. Hello. Call this kid right here, Mike Hendren, 940-232-3876. Love to work with you. And you can also reach out to us at the office, which is...
940-689-7900.
Yeah, the landline's her expertise. And then, of course, strategicrealty.net is our website, and we'd love to hear from you, love to work with you, look forward to it. And if you got any questions at all, it doesn't cost you anything to talk. We'd be glad to answer questions for you. Again, 940-232-3876 is how to get a hold of me directly. And be glad to work with you on anything, selling or buying, either one, especially if you need to sell, because we need more listings, badly.
Yes.
This market is so thin right now, and the buyers are out there. I promise you.
Yeah, I promise you. They're out there and they're
Waiting.
itching to they're itching to give you their money.
Yeah, and clearly, if you price it right, they get on it like that too. I mean,
No joke. No joke.
even if it's a manufactured home, apparently.
Oh my gosh. You just never know what
You
people are gonna,
j-
and it's not
know.
just people here in Texas. Like the
Mhm.
people that were offering on that house over there,
Uh-huh.
it was California,
Yeah,
Nevada.
Yeah.
You know, I mean, you got people from all over the globe basically trying to buy houses right now, anywhere that they can buy one.
Sure can.
So
I do also do loans in Oklahoma. I'm
licensed
in Oklahoma also, so I want to throw that
You're
out there.
holding back on us.
I forgot that. Yes.
Okay.
So I do all of Texas and all of Oklahoma.
Oh, yay.
Come
okay.
on. You're holding back on us.
I forgot that. That's important.
Well, Cindy, we look forward to having you back.
Thank you.
All right, guys, take care out there. We'll see you next time with another episode of Strategic Moves with Lou. See ya.
Bye.
Toodles.